Hey guys, welcome back. Patrick here. Today I want us to talk about Tattooed Chef, TTCF, which dropped another 11% today. That's another big hit in our portfolio and just continues that trend of all of the SPACs and all of the retail-oriented stocks getting absolutely pummeled by the market over the past 2 months. Right now, they don't have any support by Wall Street, which controls the big money, right? So it's pretty clear to me, I talked about it yesterday with other SPACs, right? But it's pretty clear to me that right now, Wall Street is just betting against these stocks. And then eventually, at some point, once they kind of validate themselves, once they get more revenues, and dare I say, like this, the forbidden word, actually getting profits, then what's going to happen probably is Wall Street is going to get behind them and really push them to be successful and the share price go up. But still, when you look at Tattooed Chef, 11% is a fairly big, steep drop in one day. So when you look at the filings and when you look at the latest news, you do see some areas of concern. So that's what we're going to be talking about today. Like, what's going on with stock and am I going to be selling? Because there are some doubts, some little red flags with the company. So let's talk about it. Let's start right now. Alright guys, let's start by saying that I like Tattooed Chef. This is a company I've been following since they announced the merger, and you guys know my bullish thesis probably. I've talked about it many times. I go to Sam's Club, I look at the number of products that they have. You can clearly see that the products are selling, and for example, the one thing that I like about it is that you can actually test the product yourself. So I like the pizzas, my wife likes the acai bowls. There's a lot of different products that they have that I like, and I do think that this movement, of eating cleaner and everything is going to get bigger and bigger over the years. But with that said, when you look at it objectively, you can clearly see that the company has been in a downtrend for the past 3 months now. So since the middle of January, which coincides with GameStop and with Wall Street literally fighting against the small retail investors. So Carson Block went on TV and he mentioned that they specifically are targeting the SPACs and the other companies that are owned by small retail investors. So there is that struggle right now that is absolutely undeniable. And let's be totally honest, for now, Wall Street is winning. Right, so all these SPACs and stocks have been going down, and buying in a downtrend like this is risky because of days like today, right? So I bought recently at $19. I had no real expectation that the company would drop by $2 today, right? So you couldn't really see that coming. When the company is in a downtrend, I can't tell you how long the downtrend is going to last. People on TV can't tell you. Literally, no one can. At some point, the stock is going to stabilize and then go back up, but that can take 3 months, can take 2 years. No one knows. So always be careful when you buy shares in a downtrend, right? You have to be very patient. It has to be a conviction play for you that is long term. Still, $2 drop is very high. When you look at the volume, you can see it was 9 million today, much higher than the previous couple of weeks, right? So today was people literally dumping their shares of this company. But why would they do that? Why this panic selling all of a sudden? Well, there's two big reasons. The first one is the CFO resigned very recently. So Charles F. Cargyle was the CFO, and he resigned of his position on April 15th, so in the past week. And so why would people care about that? So I watched Jeremy from Financial Education talked about Tattooed Chef today, and generally I like his analysis and everything, but I'm kind of surprised that he didn't mention this more. Like he said that he doesn't care about the CFO and everything. So yeah, I personally don't care about the CFO really either, especially since he's being replaced by a lady that's been with the company for quite a while now. Miss Ackman, I believe her name is Stephanie, right? She's been with the company since several years. So she knows everything. She's been a CFO before. That's not a big problem. Why I believe that this is affecting the stock is when you dig a little bit deeper, and I'm surprised you didn't mention this. This guy has only been the CFO for Tattooed Chef since August of 2020. All right, so he's been in his position for about 6 months. That is not a long time. So you can say, well, maybe he didn't like his job. Maybe he didn't gel well with the rest of the team. He's never had a position as a CFO in a food company before. So maybe he just didn't like it or it didn't work out. That in itself is very possible. We literally don't know until they tell us more about it, right? We're just theorizing what happened. So that in itself is not a big deal. That wouldn't really spook the market by 11%. When you dig a little bit deeper is when you're going to find like why this might be potentially a little bit scarier. I don't think it is, right? But you still have to consider the possibility. So in their latest annual report, they have to disclose all of the risks associated with the company. Strongly encourage you guys to learn to decipher all of these filings. You're going to learn so much about your companies. On page 18, they're talking about their internal controls for the financial reporting, right? One of the main reasons why this guy was appointed as CFO is to help them develop these controls and these reporting because their accounting department is not up to par. So think about it. This is a company that was more like a family type business, right? For several years, private, and it's the CEO, Sam Gallanty, his daughter, they're making some products, they're selling them. It's not quite a public company. They're not in the S&P 500. So I'm not going to say that they're like cooking the books or anything like that, but their department that does accounting just was not up to par. And this is exactly what they're talking about here. So I'm not going to read it. I strongly encourage you guys to go read it, though. It's on page 18. But really, like they notice that they have weaknesses in their internal controls of their financial reporting. They don't have enough employees in the accounting department. They don't have enough experience. They don't have the processes in place. In other words, if you really go down to the gist of it, their accounting department is not up to par and is not sufficient for a public company. So that is why when the guy leaves, I mean, it's going to make some people a little bit suspicious. Like, did he notice something that was inappropriate, right? And now he's going to be under an NDA and he's not going to be able to talk about it. So I don't think it's the case, but that's why it is going to spook off some people, right? Especially when you consider that right at the same time, you have Sam Gallanty, the CEO, that sold $8 million worth of shares. This was also announced very recently. So when you have all of that combined, that's the type of news that really scare off the market, especially these companies that we own that are small retail investor oriented, right? That have the paper hands. So that's why those are the two main reasons today I believe that the stock really tanked. When you look at the situation objectively, whether you're an investor like I am or not, doesn't really matter. You have to realize that this is really overblown in my opinion. The CFO, yeah, I would prefer if he was still there, right? I would prefer if they didn't have accounting problems and reporting problems. But you have to ask yourself, is this fraud? Is this incompetence? Or is it growing pains for a private company that was more family based and now going public? In my opinion, it is not fraud. I am not sensing those red flags that I did with some of the other companies that I've talked about on the channel, right? There's some companies like Clover Health that I never really liked, and then you had some pretty big short reports on it and went under $10 before this current squeeze. Those companies, I mean, you could just feel the red flags with them. This one, the fact that you can actually test the products yourself just gives you so much more confidence. You can literally go to the store, wait, and see if people are buying it, right? So, yeah, maybe their reporting was not the best before when they were a private company, but now they actually told us themselves in the annual report, hey, there's a weakness there, we're going to be working on it, right? So it's not like they're hiding it. If they never mentioned it and the guy just quit all of a sudden, yeah, maybe you could be a little bit suspicious. But if you were going to cook the books, you wouldn't actually talk about it in your annual report. I mean, now there's an army of people that are going to be scrutinizing the company and making sure that everything is by the book. So I don't think there's fraud. Now, is it incompetence? I mean, that we don't know yet. It's going to take a long time for us to know if this company can actually deliver, right? So we know he has a lot of experience. She's very good at developing products, but the company is still generating a little over $100 million, right? Are they going to get their 222 this year, and next year are they going to get to 350? We're going to see over the next quarters. So we can't really call it incompetence. In my opinion, again, this is my video, it's just my interpretation. It is just growing pains from a company going from public, it's just a father and his daughter working together and selling products, to getting into the public sector, which is going to be much more difficult for them. Lots more scrutiny, a lot more demands by the SEC, and that's what we're seeing right now. Now, as for Sam Galletti selling 8 million shares, does that bother me? I mean, the guy has been working on this company for several years now. He wants to take money off of the table. Are the optics bad when you consider that the CFO has just quit and you have both news at the same time? Yeah, it's not the best, right? But isn't normal that the guy wants to take some money off the table and go build a house or go buy a yacht or whatever the rich people do, right? So I'm not too concerned with that. That's just the way I'm seeing it. I'm not going to really be buying a lot more shares right now because the stock is in a downtrend. I have pretty big position already. But I'm not too concerned about it. I will buy more as the share price starts to recover. I have maybe about like 60% of my position that I would want to have right now. I want to almost double it, but that's going to take a while. I'm going to be very patient with it, and right now I'm just going to be nibbling on it as the share price keeps going down. So guys, I hope you enjoyed the video. I hope it gives you a different perspective on the company, right? Don't be too scared about it. I mean, you guys know that they've all been getting attacked right now, and I know that we're all struggling with our portfolio. All of the stocks that we're into that we think are going to be big in the future are dropping consistently over the past 2 months. I mean, I know that on a daily basis, it is a grind and it really is frustrating, but all of these add a lot of potential in the future, and the companies especially that have products already and are generating revenues, yeah, you can sleep pretty good at night knowing that it's just a matter of time. Like, they're not going to drop another 50, 75% or something. It's not Nikola that's going to drop from $90 to $10, right? These companies can drop a little bit more, but they're not going to drop that much more at this point. So that's just my perspective. Let me know in the comments what you guys think, and I'll see you in the next video.